This presentation is for educational purpose only. ProTrendTrading.com requests viewers to consult their investment advisor before executing any trades.
Right. Hello everyone, welcome to this video of Bank Nifty analysis. We are going to review our analysis of 19th September to 22nd September and how we decided that market is going to behave in a certain way. What was the basis of that? Let's look at that. Okay, so before I start, I would like to tell you that I had a reference date with me, which was a reference time cycle point. So the time cycle reference was 20th September 2023. Okay, so this is what it is. Let's see. Okay, now so let's see what has happened on 20th of September in history. So I already have this date, 22nd. Let's go back. So 20th September and this was 15th September, a difference of 5 days. So I put my marker here. This is my reference date, and I had a time cycle date. So this is one is reference, the other is actual time cycle date. So I had time cycle date as 19th of September 2023. Okay, the reference date is wrong, it should be 2022. Okay, so we established these two facts, that these two pointers were what we were working with. So we had time cycle reference of 20th September, and then we have a time cycle date of 19th September. So let me put a vertical line here which marks the time cycle date for me in this. So it's a tricky one because 19th is a holiday. It can be either 18th or 20th, so I will go with 18th. Okay, now this was the first step in analyzing where the market is going to head. Then the next step was to identify the price range. So if I look at this, sorry, I didn't took the marker from there. So this is my price range. So if I start from here, and this is my first point where it takes a pause. So roughly 2200 points. Then this was the phase 1 of the fall, and then let's see what is there in the second phase from here to here. So second phase is as well roughly 2000 points. So we can assume that 200 points is like 10% of 2000. So yeah, so we can assume that whatever move is here between this date to this date, the next following fall is going to be 10% less than what was there. Now this is the price. Let's look at the time that this fall has given us. So if I take these bars, so this was the lowest point and this is the actual fall. So it's showing us 7 bars or 9 days. So now we come back here to our main chart. So first we mark the price point. Okay, sorry, it's already here. So this is my price point. I go down, so roughly 1700, or you can say 1800. To be on a safer side, let's say 1700. Now 10% less, I need calculator to calculate it. So 1765 into 10%, 176. So 1765 minus 176. So roughly 1500 points more we can expect from here. Again, please take it with a grain of salt. It is an expectation, not 100% confirmation. So there's a thin line between taking it for granted and anticipating it. Okay, now these two, we established these 2 points. I have shown you how the time cycle worked, what was the reference point, and what was my time cycle rate for this move. So we don't need this second chart. We will expand this one, and now we'll work on this. Okay, now let me get rid of these. We don't need it. So there were multiple ways to confirm this. I used 45-degree trend lines to confirm that this is the point where resistance has happened, or price has taken resistance on 45-degree angle, and then the second 45-degree angle towards down extended from this position, and price is trading below that. So the other way is I have a script which we have created for our own purpose. So it tells us how the market is going to turn out. So now this is what is expected, but this is not 100% confirmation that this is how market is going to behave. Hence I don't show this much. Okay, so now we know that we have already got 1765 points fall, and another 1500 points is expected. So this is again something I'm going to cover tomorrow in the analysis video. Here we are focusing on how we did this analysis. So let's see. Now we know we have these pointers. So let's say I take this, and let me go with the past, that in past it had fallen by 2200 points. So this is something I'm drawing here for my own anticipation. Okay, now this is one thing that we are expecting or anticipating, that price will go here, but at the same time we have to find some logic on the chart to have a realistic reference point. So let me see what are the nearest points around these levels. The nearest point is this 43,835, and this is very close, so I can as well take this level, that is 43,600. Hence we had this level as an expected target level after the first target level is breached. Now this is how we arrived at the first target level. So this was a clear top in between where market had taken resistance, and then while going up it has broken this resistance, and this was the breakout zone. So minimum expectation was this level, that is 44,958. I think I did this mistake in the video. I said 44,948 and I was 958 and I was showing 44,935, but anyway, that's irrelevant because we are working with a anticipation, we are not sure. However, given the past, I knew that this is how market is going to turn out, but for that we had to have a confirmation. So this is no longer needed. I got my anticipated price level, so I get rid of it. Let me put it down here. So this was 44,958, and then we had another target of 43,600. Okay, so another thing we know from the past is that this particular time cycle move was for 7 days. So let's see where the 7 days part comes into play. So this is 6 bars, 7. So let me draw a line here, vertical line. So this is my next expected date where I can expect a turn in the market or a reversal or change in trend. So now we have three things here. One is we got expected date where we anticipate market to turn direction, and we have a expected price level. So we have both time and price. So 27 September, if we are near 43,600, then yeah, we can say that this is about to reverse from here. Now there is another way to look at it. So historic was, let me write it down here. So I have it in my memory, but for you will need a reference. So the move in the past was in two sections. Section 1 was 2265 points, and the second section was 2000 points. So it was roughly, you can assume that 10% less than the actual move. So now if I see this current move, if I take price range and I go this way, here it's 1769. So if we calculate that, so 176, so 1769 minus 176, so we can expect another 1500 to 1600 points fall. So if I draw that out, let's see where it comes. Okay, so now I have two reference points. So this fall is, we are expecting another 1600 points fall, so nearest level is this. So I would say, let me draw that. Okay, so this is the level. Now let me delete this and let me get rid of this. We don't want clutter on the chart. Okay, so now here we see, so price has moved this much. Taking historical reference, we expect another move which would take us till here, right? So but again, that is 10% lesser than what earlier move was, so we'll just stick to that. Okay, where was I? Sorry, I have this habit of forgetting things. Okay, so we have this time, we have two price levels now. One is 43,600 and other is 42,600. Let's take it as a round figure for simplicity, 42,600. Okay, so now here is what we need to do. So this is my, so I ended up doing analysis for next week, which we will cover again on Sunday. So let's see here how we arrived at that this particular things will happen. One is the formation of top. This was a typical top that was there on the last time also. If you see this, if you see, we have a similar kind of top here, and then from there you had the next candle which was closing below the low of previous day. That was our confirmation that market is going in our direction, and we are on track. Now from here, my first target expectation was 44,935, which we saw coming in very easily, because once this cycle was in play, then we are sure that the cycle will continue till this next turning point. Now for I hope you have a clarity on this. So the second thing that we did was the second thing that we did was applying a rule. So one was time cycle rate, second thing was trend rule. And what was that? Trend rule was closing of daily candle below the previous day low after a time cycle top is made. Okay, so this is how we identified the trend. So let me get rid of this, we don't need it anymore. Now let me move this here, we already discussed that. So trend rule, closing of daily candle below the previous day low. So now here is what happened. There was a top as part of our time cycle expectations, then the daily candle closed below the previous day's low. This gave us a confirmation of change in trend, and then we had this anticipation of price level where the price can potentially go. So it traversed that distance that we were expecting. Now how did we make this assumption that after this market may pull back for a little bit of time and then resume its trend? That is again a rule from Gann. So what Mr. Gann says is, never trust a trend after 3 days, 3 weeks, or 3 months. Usually this is the place where highest probability of reversal is possible. Hence you have to be cautious on third day of the trend. You should always expect a pullback on third day, third week, or third month, and once the low of third day candle is broken, only then you can assume that the trend is resuming back in your direction. Let me show you this example. I hope that will help you understand it better. This was the time cycle date for 22. Now let's go back 1 year back, which is again a repeating pattern. So if we go back to 2021, now see this here again, 17th was the time cycle date. The price went down for 3 days, and then after third day there was a sudden reversal. The price of third day was not broken, price went up, again took resistance around the starting point of the rally, again came back towards the low. So again this whole move is I think 7 days or 9 days, but again the whole point is that these kind of changes come in cycle and you have to be very careful about it. So that is where the rules are going to help you identify these kind of scenarios. So this cycle repeated in 22, it repeated again in 23, but in 2021 it had a different kind of effect. So now coming back to our analysis, so I hope you got the idea of how this analysis was done and how the subsequent assumption and assessment of market was done. If you like this video, please subscribe and share with friends. Let's get it across to as many people as possible. We are trying to share knowledge here. We are not trying to hide anything, or we are not selling anything here. This is for everybody's benefit. So your support is very, very much required in this mission of ours. Now I wanted to show another thing. We have coded a script that helps us identify. Now look at this. So this script is telling me that forecast is going to land on 26th September as a low, then again it is going to bounce back from here. But like I showed you for 2021, there was a change in the way price behaved. So we have to wait and watch how the scenario unfolds around this area and then take next steps. So until then, have a great weekend everyone, and I hope you got some knowledge out of this video today. We will be bringing you more such videos in future, and please watch out for tomorrow's video. Anyway, I have given you the analysis of Bank Nifty already, but I will also be doing analysis of Nifty 50 in my tomorrow video, so I hope you will enjoy that as well. Thank you, have a good weekend, and please subscribe, share, and help promoting this noble cause of ours. Thank you.